Have you missed a payment already because of claiming your rights under the CARES Act passed by Congress a couple weeks ago? Asking for and getting a forbearance or deferment, which could destroy your credit score if not done absolutely correctly. This is only April 20th. It's not too late to go back and do it right. Join me. We have to talk about this. So this is not going to be my typical YouTube video here on my channel where we talk about all the things regarding Nashville and the real estate, finance, design, all the things that I normally do my very best to make a pretty video for you, up with some graphics and some editing to make it a good video. But this is super important, and I'm not really so great at editing anyway. So I want to get this information to you as quickly as possible to have time to act. There is less than 10 days to clear up what could be a problem that follows you around for years. If you don't understand exactly how to ask for deferment or the forbearance, an issue that could negatively affect you and follow you around for years to come, so please pass this on to anybody that you know who may be struggling making their monthly payments, but doing it wrong will hurt you so badly. As of April 18th, I'm hearing that 2.9 million Americans have already claimed forbearance and might be getting screwed by their mortgage servicer. So in order to understand this, we have to have a basic understanding of the whole mortgage process. Your mortgage is generally due on the 1st of the month. It is not considered late until after the 15th of the month. So if you pay your mortgage anywhere from the 16th until April 30th, it is late and there will be a late fee assessed, but the fact is that it's late does not get reflected on your credit score. That's where I'm so concerned. Your mortgage is not considered late until it is 30 days late. So May 1st, it will be typically reported as late on your credit report anytime you have 30 days late, which means that you can literally pay your mortgage on April 30th and still be current. Yes, you still have that late fee, so it's not a great plan. But in the future, nobody knows about it and your credit is not affected. So there's still time to correct what might have happened incorrectly. So this is key to understand when you're considering how to ask for a mortgage forbearance through the CARES Act. And not getting caught up in the loophole, the scam that does exist. In last week's video, I went over pretty much in depth what the CARES Act offers somebody having difficulty paying their mortgage due to the COVID-19 virus. And I'll put that link into the video in the description down below, so I won't go through it all the way. But for a basic re-overview, suppose you go to your lender and your servicer and say, I cannot make my payment for April 1st. I can't make my payment for May 1st, and I probably can't for June 1st, depending on when I can go back to work. But I know I am protected by the CARES Act. Please get this in writing, please, please, please. And you have to give me a forbearance. This is what you're going to say. You have to give me a forbearance and defer my payment. You have to allow me to pay those payments later. And the CARES Act also says that you, Mr. Servicer, can't report that to the credit bureaus. You cannot report our forbearance agreement to the credit bureaus. But let me be clear, the CARES Act does say that you must be current on your mortgage prior to claiming and asking for the forbearance agreement, and that the credit cannot be affected as long as you have a written forbearance agreement with your bank or servicer. Written, not late. Now that sounds good for you. So you have a written agreement to not have to pay your payment for 90 days and potentially extend that 30 more days each month, up to as long as a year, I think. And that the servicer cannot screw with your credit during the period of the forbearance. It doesn't talk about what happens later. And also, did you know that when nothing is written on your credit report, nothing said about April, May, June, people in the future, lenders in the future, are probably smart enough to figure out that this was during the coronavirus. So that sounds great. Where's the big problem, Susan? Let's talk about what we know. You're already going to be late, missing April, and you're going to miss May and June. Come July, hopefully you're back to work, hopefully you're back earning money. Potentially, you'll have to pay for those 3 months plus July. So 4 months at one time if the bank won't extend your forbearance, and if you do not get a written agreement of exactly how and when those payments are going to be made up. You want those payments deferred. By the way, the only acceptable way of making that up is to have absolutely all agreement that the only option is to have a late 3 months added to the end of the life of your loan. So if you have a 20-year loan, you want it 20 remaining, you want 20 years plus 3 months. That's the only acceptable thing to have. That's the only thing to put in writing, and that video is in the link in the description. So how most banks are going to look at this is they're squeezed. 2.9 million people have already claimed forbearance and do not get a written deferment of that payment to the very end of the life of the loan. You know, if they gave that to everybody, they're going to be bankrupt. At the end of 3 months, there may be 2.9 million people who have taken forbearance but didn't have a written deferment agreement for that full, and the missed payments are due in full. They're going to have to get back to the bank, and they're going to have to ask for more time. But the servicers have already lost out on tons of money on 3 months from 2.9 million people, and they're having to answer to the people who are expecting their interest on those loans. That servicer himself is in a world of hurt, and he knows that the only leverage he has is to push you to pay, to get that payment all at once. The only leverage he has to push you to make that happen is to threaten to ruin your credit. Now, to be fair, the CARES Act stated the servicer had to give you the forbearance for potentially even up to a year, but it did not define what happens after that time is over and how it has to get paid back. And it basically put that servicer at near bankruptcy themselves if it continues to go, but that's the law, they have to. There is never an action without a reaction in anything we do. So the mortgage servicer is going to use as much leverage as they can possibly have to coerce you into making those payments now. The bank understands that you understand. Best interest rates, best deals, refinancing, all of those things have to happen with really good credit scores. And they're going to threaten to ruin yours. But you're thinking, who cares? The CARES Act is going to protect my credit. It said so, right? No. The CARES Act only defines that the servicer cannot report to the credit bureaus during the mortgage forbearance period. That 3 months, that 6 months, that year. That is, lenders are not allowed to report you as late for April, May, and June, if that's what you negotiated. But now what happens in July when you have to make that 4 months worth of payments? Unless you got in writing before the forbearance started that the lender would put those 3 months at the end of the life of your loan, you agreed to basically figure it out with the lender at the end of the 3 months. And are at the mercy of the servicers, which in turn is at the mercy of their stockholders, those who hold the derivatives. Everyone wants to be paid their due share. So the bank is going to send you on over to their loss mitigation if you really can't pay. This is the department which will not only talk you into, they will only talk you when you're 30 days late, but the CARES Act protects you only if you're current. So see, late, current, you gotta be current in your mortgage, but the CARES Act won't pay you if you're late. The mortgage mitigation won't talk to you unless you're late. The potential loophole is a scam. You can't get to loss mitigation to renegotiate your loan until you're 30 days late, but when you're 30 days late, the CARES Act doesn't protect you. Once you finally get through to the loss mitigation department, they're going to help you do something called a loan modification. You're going to have to prove with your bank account, all your bank account information, your stock account information, all your employee confirmation that you are in dire straits. You're going to have to verify everything, and that you cannot possibly make up that lump sum payment. And furthermore, to get current, you're going to have to modify your agreement for your loan. But remember, you're now at least 30 days late on your loan payment. That credit score that you worked so hard to get to 740 before COVID-19, so that you could always get the benefit of the very best long and short-term financing available, because you've missed and now are 30 days late, your credit score may be as much as 100 points lower because of that one 30-day late payment, according to credit bureaus. So what used to be a 740 credit rating is now down to 640. You can't even get a mortgage, a conventional mortgage, because the low credit score for a long-term mortgage as of the last 30 days is now 650. That 30-day late forbearance period that potentially 2.9 million people are going to have if they don't have a written agreement with the servicer before ever missing one payment, then that just possibly have cost 2.9 million Americans home foreclosures. Hey guys, it's not too late. This is only April 20th. Even if you have a written agreement with your servicer to allow you a forbearance, but that agreement does not spell out that the monthly mortgage missed can be added to the end of the life of the loan in writing, signed by all parties, that those months in forbearance are not due in 3 or 4 or 6 months in full, but at the end of the life of the loan, then please, if there's any possible way, pay your mortgage and do not accept that forbearance. It is not too late to make that payment. If there is any way possible, get out of that forbearance if they won't put it in writing to you before you've ever entered it. Just because you've got permission, you don't have to take it. Give the money. Please, please pass this on to anybody you know who's talked about having or taking a forbearance or considering it. It can be done right, but please share this video. But if you have to take it, you have to, but we have to move fast. So hey, if you've made it this far, I know you're interested in what we have to talk about here on my channel. So go ahead, subscribe right down there. Tap the bell so that you get a message every single time I drop a new video, which is weekly. Reach out to me if I can help you in any way. Clarification of complicated bills is something that I'm working hard on getting right to help my customers and clients. I don't want to see anybody hurt with this. Talk soon.